Namaste, Adab, Sat Shri Akal, good afternoon. Myself, Paras Kumar Patro, a CA final student pursuing second year of articleship. Esteemed jury, respected CA professionals and all my fellow lovely CA aspirants. I am feeling extremely delighted by the fact that I have got an opportunity to present my thoughts on the topic, important clauses of CARO 2020, a critical analysis. MCA, Ministry of Corporate Affairs, has issued an order, namely Company Auditors Report Order under Section 143, whereby a specified set of companies are required to comply with CARO. Previous to CARO 2020, there was CARO 2016. However, CARO 2020 has increased the reporting requirements on the part of company and on the part of auditors. Before proceeding ahead, let us discuss what are the applicability criteria of CARO 2020. There is no specified set of companies to whom CARO 2020 is applicable. But yes, we do have a negative list. The companies to whom CARO 2020 is not applicable. The companies are banking company, insurance company, small person company, OPC, Section 8 company, and a private limited company which is not a subsidiary or holding of public company and having paid up share capital and free reserves and surplus not exceeding 1 crore and total loans and borrowings from any banks or financial institution during the year not exceeding 1 crore and total turnover as per Schedule 3 of the Companies Act does not exceed 10 crores. All the companies, these set of companies are required to comply with the provisions of CARO 2020. Now moving ahead, there are several reporting requirements or several matters which have to be included in the CARO. We shall discuss each and every matter in point by point manner. First point is maintaining records of property, plant and equipment. Whether the company is maintaining proper records showing full particulars and quantitative details of each and every property, plant and equipment. Whether the company is maintaining full records showing full particulars and quantitative details of all the intangible assets. Whether the company is undertaking physical verification of each class of property, plant and equipment at reasonable intervals. And in that case, any discrepancies so observed are being properly adjusted in its books of accounts. Whether the title deeds of all the immovable properties except the title deeds whereby the company, except in case of properties which are under lease agreement and lease agreement is duly executed in the favor of lessee, disclosed in the financial statements are held in the name of company. If not, the details of such properties need to be disclosed in the following manner, containing columns such as description of property, gross carrying value, held in the name of whether promoter, director, relative or employee, period held, indicate range wherever appropriate, and reasons for not holding in the name of company. Further, if the company has undertaken revaluation of its property, plant and equipment, whether such revaluation was carried out by a registered valuer, and in case the revaluation is more than 10% of the aggregate value of each class of property, plant and equipment, such fact needs to be reported in CARO. Further, if any proceedings have been initiated against the company under Benami Property Transactions Act pertaining to any immovable property, such fact needs also to be disclosed in CARO. Moving on to next matter, we have physical verification of inventories. Whether the company is undertaking physical verification of its inventory at regular and reasonable periodical intervals, and whether such physical verification is appropriate in the opinion of auditor. If not so, auditor needs to suggest the correct coverage and procedure needs to be adopted. Further, if any company has been granted working capital limits in excess of 5 crore on the basis of security of current assets, and whether the quarterly returns or the quarterly statements being filed by the company with the banks or financial institution and the current assets value as per its books of accounts are agreement or are in accordance with each other. Next point, we have repayment of investments, guarantee, security, loans granted by the company. Whether during the year the company has extended any sort of loans and advances to the company to any entity, in such a case, aggregate amount and balance outstanding as on the date of balance sheet date for subsidiary, association, joint venture needs to be reported. Aggregate amount and balance outstanding as on that balance sheet date for entities other than subsidiary, association, joint venture needs to be reported. Further, whether the loans and advances so extended are prejudicial to the interest of the company, whether their existing schedule of repayment is stipulated beforehand in terms of loans and advances, and whether such receipts are regular in nature. In case there exists any amount which is pending for more than 90 days, such fact needs to be disclosed in the CARO. Further, if any loans or advances which are due for settlement during the year, whether such loans or advances are renewed, extended, or any fresh loans and advances have been granted in respect of such loans to settle the overdue of the previous loans, such aggregate amount of such renewal, extension, or fresh amount of sanction of loans needs to be reported in CARO. Also, if any loans and advances which are repayable on demand or which are repayable without specifying any terms and conditions of the repayment, then aggregate amount of such loans and advances and percentage of aggregate amount of such loans and advances with respect to total loans and advances granted needs to be reported in CARO. Moving on to next matter, we have compliance of provisions of section 185 and 186. In respect of any loans and advances granted, whether provisions of section 185 and 186 of the Companies Act 2013 have been duly complied with. If not, such fact needs to be reported in CARO. Acceptance of deposits is our next matter. Whether the company has raised any deposits, whether the company has raised any funds by way of deposits or green deposits, then whether the company has complied to the provisions of section 73 to section 76 of the Companies Act, RBI issued directives, Company Law Board order, Ministry of Corporate Affairs any judgment, and any other law and order passed by any court or tribunal. If not so, such fact needs to be reported in the CARO. Cost records. Whether the company is maintaining its books and records as per the provisions of section 148(1) of the Companies Act 2013. Moving on to the next matter, we have statutory dues. Statutory dues are the dues which are pertaining to any statute or law, for example, GST, excise, VAT, income tax, employee provident fund, employee state insurance, and etc. Statutory dues can be of two types: undisputed statutory dues and disputed statutory dues. In case of disputed statutory dues, the aggregate amount of the disputed statutory due and the forum where the disputed statutory due is being dealt needs to be reported. Mere representation to any revenue authority shall not be counted as disputed statutory due. Moving on to undisputed statutory due. In case of undisputed statutory due, whether the company is regularly paying the undisputed statutory due on timely basis and within the deadline specified. If not so, aggregate amount of the undisputed statutory due which is outstanding for more than 6 months as on the date of balance sheet needs to be reported in the CARO. Moving on to the next matter, we have disclosure of transactions which are not reported in the books of accounts. During the year, if we have any transaction or any financial event which have not been recorded in the books of accounts of the company, but the same has been disclosed or surrendered as income before the revenue or before the tax authorities under the Income Tax Act 1961, then the details of such transaction along with the aggregate amount needs to be reported in CARO. Moving on to the next matter, we have default in repayment of loans or other borrowings. Whether during the year the company has committed any default in repayment of loans or other borrowings, if yes, then such facts needs to be reported in the format containing the following columns: nature of borrowing including debt securities, name of lender, that is lender-wise details, amount not paid on due date, whether principal or interest, number of days delay or unpaid, remarks if any, whether the company has been declared as willful defaulter by any of the banks or financial institutions. If yes, it needs to be reported in CARO. Whether the company has raised any funds out of loans and borrowings for a particular purpose, and out of the funds raised, if it is meeting any purpose other than the specified purpose, then such fact needs to be reported in CARO. Further, if the company has raised any funds or borrowings through short-term loans and borrowings, and the funds are being utilized for other than short-term purposes such as long-term purposes or middle-term purposes, such fact needs to be reported in CARO. Further, if the company has raised any loans or borrowings to meet the obligations of its subsidiary, associates, and joint venture, such aggregate amount needs to be reported in CARO. Also, if the company has raised any loans or borrowings by keeping in pledge the securities of subsidiary, associates, and joint venture, such aggregate amount of loans and borrowings needs to be reported in CARO. Next matter, we have money raised by IPO, FPO, preferential allotment, private placement of shares or convertible debentures. Whether any funds have been raised by the company by IPO, initial public offer, or FPO, follow-on public offer, then such fact needs to be reported in CARO. And whether the funds for which they have been actually raised by way of IPO or FPO, whether the company is utilizing the funds for the same purpose. If not, such facts need to be reported in CARO. In the default of such the purpose, days in default and subsequent rectification of such default needs to be mentioned. Same in case of
2 minutes left.
and private placement of shares and debentures. Whether the funds so raised are being utilized for the purpose for which it was actually used. If not, then the fact of delayed number of days and subsequent rectification needs to be mentioned in CARO. Fraud reporting. Whether any fraud has been committed by the company or over the company, then such fraud and aggregate amount of such fraud needs to be reported in CARO. Whether provisions of section 143 have been duly complied with, whether any audit report under section form 80T4 have been issued, and whether rule 13 of the company auditor's audit rule have been duly complied with. However, if there are any whistleblower complaints received during there, such whistleblower complaints needs to be considered in the CARO. Next matter is only applicable to Nidhi companies. If the company is a Nidhi company, we need to ensure that the net owned fund to deposit ratio is 1:20, and whether the Nidhi company is maintaining 10% unencumbered term deposits to meet out its liabilities. Further, if the Nidhi company has committed any default in meeting the payment of principal or interest component of any loan or borrowing, such fact needs to be reported in CARO. Next matter we have pertaining to related party transactions, compliance with section 177 and 188. If the company is entered into any sort of related party transactions, then recording of such related party transactions in its books of accounts and appropriate disclosure of such related party transactions in the financial statements are in accordance with the section 177 and 188 of the Companies Act 2013. Is there or not, we need to ensure. Next point we have internal audit system. Whether the internal audit system of the company is commensurate with the size and nature of the business. Further, whether the internal audit reports have been duly considered by statutory auditor or not, such fact needs to be reported in CARO. Non-cash transaction with directors. Whether the company is entered into non-cash transaction with directors or any other person connected to the directors, if yes, aggregate amount of such non-cash transaction needs to be reported in the CARO along with the compliance of section 192 of the Companies Act 2013. Next matter is registration of RBI. Whether the company is registered under section 45IA of the RBI Act 1934, if yes, whether proper registration has been taken or not. Whether the company is undertaking any NBFC or housing financing activities without any valid certificate of registration, such fact needs to be reported in CARO. Whether the company is a core investment company and the company meets the criteria of core investment company or not, we need to ensure. If not, such fact needs to be reported in CARO. If in a group company, if we do have more than one CIC, then total number of CIC and the details of each CIC needs to be reported in CARO. CIC means core investment corporation. Moving on to the next fact, we have cash losses.
Sorry, Paris, we are running out of time. Just 1 minute.
In cash losses, aggregate amount of cash losses incurred in the financial year or preceding financial year needs to be reported. In point of existence of material uncertainty, auditor need to assess that any material uncertainty do exist on the basis of aging report, financial ratios, expected date of realization of financial assets, payment of financial liabilities, and etc. If there exists any material uncertainty, then that fact needs to be reported. Then next we have resignation of statutory auditors. If any statutory auditor has resigned during the year, resigned during the financial year, then such statement of resignation along with the objections, issues or concern raised by the statutory auditors needs to be reported in the CARO. Transfer of funds to Schedule 7 fund. If during the year, if any unspent sales or balance is there, such fund needs to be transferred to funds specified under Schedule 7 along with Section 135 complaints. Qualification or adverse audit remark in other two companies. In case there are any adverse qualification remarks in the audit report issued by
Thank you, Paris.
in the consolidated financial statements,